Have you ever wondered how some investors build massive real estate portfolios without using their own money? It sounds unbelievable, but the secret is simple. They use other people's money, also known as OPM. The trick isn't just about borrowing, it's about strategically using resources that aren't yours to grow your wealth faster. And the last method we'll cover, it might completely change how you see real estate investing. OPM stands for other people's money, and it's exactly what it sounds like. Using funds from banks, private lenders, partners, or even property owners to finance real estate deals instead of relying on your own cash. Most successful investors don't use their own money to buy properties. Instead, they leverage OPM to maximize returns while minimizing their personal financial risk. So how does it work? Let's break it down step by step. Get loans from banks or private lenders. One of the most powerful ways to leverage other people's money, or OPM, is by securing a loan from a bank or private lender. This method allows you to fund real estate deals without tying up your personal savings. Traditional banks offer mortgages and investment loans, but they often come with strict requirements. To qualify, you typically need a strong credit score, steady income, and a sizable down payment. While banks provide lower interest rates, their approval process can be slow and restrictive. Private lenders, however, are a game changer. These are individuals or companies willing to finance real estate deals with fewer requirements and faster approvals. Even if your credit score isn't perfect, many private lenders focus more on the profitability of the deal rather than your financial history. The secret to getting approved? Have a strong investment plan. Lenders want to see how the property will generate income and how you plan to repay the loan. If the numbers make sense, lenders are far more likely to say yes. Partner with investors who have capital. Why go at it alone when you can partner with someone who already has the funds? Instead of struggling to secure financing yourself, you can team up with investors who have capital but lack the time or real estate expertise. Many experienced investors are looking for opportunities but don't want to handle the day-to-day management of properties. This is where you come in. By leveraging your knowledge and effort, you can create a mutually beneficial partnership that allows both parties to profit. In this setup, you take on the active role, finding the deal, managing the property, and handling all business operations. Meanwhile, your partner provides the funding needed to acquire and maintain the property. Once the investment starts generating income, you both split the profits based on an agreed-upon percentage. It's a win-win. Your partner earns a return on their investment without lifting a finger, while you get to invest in real estate without using your own cash. This strategy not only makes real estate investing more accessible, but also allows you to scale your portfolio much faster than going solo. Use seller financing and creative strategies. This overlooked method can change everything. Instead of borrowing from a bank, why not let the seller finance the deal? Seller financing allows the property owner to act as the lender, meaning you pay for the property over time rather than making a large down payment up front. This approach can make it much easier to secure a property without dealing with strict bank requirements. Beyond seller financing, other creative strategies can also help you invest in real estate with minimal cash. One option is a lease option, where you rent a property with the option to buy it later, often using part of your rent as a future down payment. Another strategy is subject to deals, where you take over a seller's existing mortgage instead of applying for a new loan, allowing for a smoother and faster acquisition. For short-term investments, hard money loans can be a game changer. These are high-interest loans from private investors designed for quick flips or short-term deals. While the rates are higher, the approval process is much faster than traditional bank loans, making them ideal for investors looking to move quickly. With these creative financing strategies, you can acquire properties with little to no money down, making real estate investing more accessible than you ever imagined. Use business credit to fund real estate deals. Most people believe you need personal savings to invest in real estate, but smart investors know how to leverage business credit as a funding source. This method allows you to finance deals without draining your personal finances or relying on traditional bank loans. The process starts by setting up an LLC or business entity, which separates your personal and business finances. This step is crucial because it protects your personal assets while building a strong business credit profile. Next, you need to establish business credit by opening accounts with vendors, getting a business credit card, and making consistent on-time payments. Over time, this builds a solid credit history that increases your borrowing power. Once your business credit is established, you can apply for business lines of credit. Many banks and financial institutions offer these funding options without requiring personal collateral or high credit scores. This means you can secure the capital needed for real estate investments strictly under your business name. The best part? Business credit does not affect your personal credit. Investors often use it to cover down payments, renovations, or even full property purchases. Many successful real estate investors buy properties using business credit, fix them up, and sell or refinance them, all without using their own cash. Tap into retirement accounts, self-directed IRA and 401k loans. Most people don't realize they can use their retirement savings to invest in real estate without penalties or early withdrawal fees. This strategy allows you to tap into funds you already have, giving you access to thousands of dollars without relying on traditional loans or outside investors. One option is a self-directed IRA, or SDIRA, which offers far more flexibility than a traditional IRA. While standard IRAs limit investments to stocks and bonds, an SDIRA lets you buy real estate using tax-free or tax-deferred funds, depending on the type of IRA. The best part? Any rental income or profits from property sales go directly back into the IRA, allowing you to grow your retirement wealth while building your real estate portfolio. Another powerful strategy is taking a 401k loan. If you have an employer-sponsored 401k or a solo 401k, many plans allow you to borrow up to 50% of your balance, up to $50,000 as a loan. Unlike traditional loans, you repay yourself over time with interest. Meaning, instead of paying a bank, you're putting the money back into your own retirement account. By leveraging retirement funds, you can access capital you already own, allowing you to finance real estate deals without taking on debt or searching for outside investors. And here's one last bonus strategy: wholesaling real estate. You can make money without even owning property. Let's explore it. House hacking. Live for free while building wealth. Want to live for free while building your real estate portfolio? That's exactly what house hacking allows you to do. House hacking is a strategy where you buy a multi-unit property, like a duplex, triplex, or fourplex. Live in one unit and rent out the others. The rental income from your tenants covers your mortgage payment, allowing you to live for free or at a significantly reduced cost. One of the biggest advantages of house hacking is that it requires low or no money down. Investors can use FHA loans, which require just 3.5% down, or VA loans, which offer 0% down for military members to purchase a property with minimal upfront costs. Since you're living in the property, you also get better loan terms and lower interest rates compared to traditional investment properties. While living in your unit, you're also building equity, meaning you own more of the property over time as your mortgage gets paid down. Instead of throwing money away on rent, you're investing in an asset that grows in value. Once you're ready to move, you can rent out your unit and use the rental income to purchase another property. This strategy allows investors to scale their real estate portfolio quickly while maintaining stable cash flow. Many of today's most successful real estate investors started with house hacking because it's one of the easiest and safest ways to begin investing with little money while still having a place to live. If you're looking for a low-risk way to get started in real estate, this might be the perfect strategy for you. So, does real estate investing require a lot of cash? Not at all. By leveraging other people's money through bank loans, investor partnerships, seller financing, business credit, and retirement accounts, you can start building your real estate portfolio today, even if you have little to no money of your own. Which OPM strategy do you think is the most powerful? Comment below. And don't forget, like this video, subscribe to our channel, and hit the notification bell so you never miss out on more game-changing real estate tips. See you in the next video.